Property and Casualty State Exam Answers. Welcome to the quiz. What is the main purpose of a difference in conditions DC policy? Is it A, to fill gaps in primary property coverage, often covering perils like flood or earthquake excluded in standard forms? Or B, to cover differences between insurance policies? C, to provide primary liability coverage? Or D, to insure against conditional losses? The answer is A. Standard property policies exclude catastrophic perils like flood, earthquake, war, or nuclear to control exposure. A DC policy is a specialty coverage that picks up many of those excluded perils, providing broader protection, especially for multinational companies needing consistent coverage worldwide where local policies vary. It fills gaps in underlying property coverage, not policy differences, not liability, not conditional losses. DC primarily covers excluded perils on primary property. Next question. What is the purpose of an installation floater? Is it A, to insure materials and equipment while they are being installed at a job site? Or B, to provide liability coverage for installation work? C, to cover installed equipment after completion? Or D, to float the insurance premium during installation? The answer is A. Contractors risk damage to property they are installing, e.g., machinery, fixtures, HVAC, during transit and installation. An installation floater, inland marine, covers that property against physical loss from covered perils until the job is complete and accepted. Post-completion is property or completed operations, not liability, not premium float. Installation floater protects materials/equipment during the installation phase. Next question. Which of the following is typically covered under an ocean marine hull policy? Is it A, physical damage to the ship itself? Or B, liability for injury to passengers? C, damage to cargo? Or D, liability for pollution? The answer is A. Ocean marine insurance has different parts. Hull coverage protects the vessel, ship, itself against physical damage from perils like collision, stranding, fire, or sinking. Cargo covers goods being shipped. Protection and indemnity, P&I, handles liability like passenger injury or pollution. Hull specifically insures the physical structure and machinery of the ship against marine perils. Next question. What does pro rata liability clause mean when two or more policies cover the same loss? Is it A, each insurer pays its share of the loss based on the proportion its policy limit bears to the total limits of all applicable policies? Or B, the insurer that wrote the policy first pays the entire loss? C, the loss is paid by the insurer with the highest limit? Or D, the insured chooses which insurer pays? The answer is A. When multiple policies apply to the same loss without other insurance provisions overriding, pro rata, or contributory, liability divides the loss proportionally among them based on each policy's limit relative to the total limits, e.g., if policy A has $100,000 limit and policy B $200,000, A pays 1/3, B pays 2/3. This is common in property or liability when no primary/excess relationship exists, not first rider or highest limit. Insured does not choose. Pro rata ensures fair sharing based on limit size. Next question. What is the key function of a fiduciary bond? Is it A, to guarantee the honest performance of duty by a person handling another's money or property? Or B, to bond a company's financial officers? C, to serve as proof of workers' compensation insurance? Or D, to guarantee contract performance? The answer is A. Fiduciary bonds, also called probate, executor, administrator, guardian, or trustee bonds, are surety bonds that protect beneficiaries or estates when someone is appointed to manage money or property for others, e.g., executor of a will, guardian of a minor trustee. The bond guarantees the fiduciary will perform duties honestly, faithfully, and according to law. If they steal, mismanage, or breach duty, the bond pays the harmed party up to the bond limit. It is not for company officers, that's D&O. Not workers' comp proof. Not contract performance, that's performance bond. Fiduciary bonds ensure integrity in handling others' assets. Next question. In a commercial package policy, CPP, what is the purpose of the Common Policy Conditions form? Is it A, it contains conditions that apply to all coverage parts within the package, such as cancellation and inspection rights? Or B, it lists conditions common to all businesses? C, it defines the perils covered? Or D, it is the declarations page for the package? The answer is A. A commercial package policy combines multiple coverages, e.g., property, liability, crime, inland marine, under one policy for efficiency. The Common Policy Conditions form, usually IL0017, includes general rules that apply across every coverage part in the package, provisions like cancellation, changes, inspections/audits, premiums, transfer of rights, and concealment/fraud. These are not business-specific conditions. Perils are defined in individual coverage forms. Declarations are separate. The Common Conditions form ensures uniform rules for the entire multi-coverage package. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.